Imagine this, a global superpower, once unchallenged, now locked in a brutal economic showdown that's reshaping the world order. Just hours ago, tensions escalated as the U.S. slapped sky-high tariffs on Chinese goods, only for Beijing to fire back with a chokehold on critical resources. This isn't just another headline, it's a wake-up call. How China is tightening the screws in its trade war with the U.S., standing taller as tariffs rise, and forging alliances that expose the cracks in America's rivals. Let's break down what's really going on. The U.S.-China trade war, reignited under President Donald Trump in 2025, has entered a dangerous new phase. What started as a bid to fix America's economy has morphed into a high-stakes battle of wills, with Beijing not just defending but counterpunching with precision. Here's the raw truth: the higher the tariffs, the more China's confidence seems to grow as Beijing stands firm in its dispute with Washington and scouts new partners to sidestep the pain. Let's start with the facts. On October 10, 2025, Trump revived the trade war by imposing an additional 100% levy on China's U.S.-bound exports, coupled with fresh export controls on key software and technologies. This wasn't a subtle jab, it was a declaration aimed at curbing what the White House calls unfair trade practices, from intellectual property theft to state subsidies flooding global markets with cheap goods. Trump supporters see this as proof of deep-seated issues in the U.S. economy, rallying patriots to boycott Chinese products in a grassroots push that's gaining traction on social media. But Beijing isn't blinking. In response, China announced sweeping export controls on rare earth minerals, those obscure but essential elements powering everything from electric vehicles to military hardware. These materials are China's ace in the hole. They control over 80% of global supply, and this move could hike costs for U.S. industries by billions, forcing companies like Apple and Tesla to scramble for alternatives. Why does this matter? Because this isn't isolated, it's the next front in a war that's already cost the global economy trillions. The World Trade Organization warns that escalating tensions between the U.S. and China could deliver a long-term hit to global growth, urging de-escalation before it's too late. Yet, just yesterday, both sides agreed to fresh talks next week, a glimmer of pragmatism amid the saber-rattling. Trump's team, including Treasury pick Scott Bessent, is signaling a desire to get things back on a good course, but with reciprocal tariffs threatened at levels up to 100%, the path to peace looks rocky. Now, here's what the media won't tell you. While the U.S. grapples with inflation spikes from these tariffs potentially adding 2 to 3% to consumer prices, China is pivoting masterfully. Beijing's economy, projected to grow 5.2% this year despite the headwinds, is finding new partners along the way, insulating itself from American pressure. Trade with Southeast Asia, Africa, and even Europe has surged, with initiatives like the Belt and Road expanding Beijing's influence. But one alliance stands out as particularly telling and troubling: China's deepening ties with Russia under Vladimir Putin. This brings us to a critical angle that's often glossed over. As China tightens the screws on the U.S., it's leaning on partners like Russia for energy, raw materials, and geopolitical leverage. Sino-Russian trade hit record highs in 2025, with China snapping up discounted Russian oil and gas to fuel its factories, while the West slaps sanctions on Moscow over Ukraine. On the surface, it's a win-win for Beijing: cheap resources to weather the trade storm and a buffer against U.S. isolation tactics. But dig deeper, and this partnership exposes the fragility of Putin's regime, a crumbling facade that's accelerating toward collapse. Let's be bold and analytical here. Vladimir Putin, the self-styled strong man who's ruled Russia with an iron fist since 2000, is not the invincible force his propaganda machine portrays. Far from it. Russia's economy is buckling under the weight of a disastrous war in Ukraine that's dragged on for nearly 4 years, claiming over 1.1 million Russian casualties and draining the treasury. President Trump himself warned just days ago that Russia's economy is on the brink of collapse, citing depleted reserves and soaring inflation claims the Kremlin vehemently denies, insisting on considerable reserves to push through, but the evidence is damning. Russia's latest offensive in Ukraine has gained next to nothing, with depleted armies and low morale signaling a military that's stretched thin. Domestically, infrastructure is failing. Over 31 schools have collapsed in less than 2 years due to neglect, and more than 510 are unfit for use, lacking basics like running water or heat. Oligarchs are fleeing, oil facilities are burning, and Putin's grip on power is slipping as public discontent simmers. Putin is no strategic genius, he's a thug who's betrayed his own people, squandering Russia's potential on imperial delusions. His invasions, from Ukraine to earlier meddling in Moldova, Georgia, and Chechnya under Yeltsin, reveal a pattern of aggression that's never truly reformed. Now, as Trump plans a potential meeting with Putin in Budapest hosted by Hungary's Viktor Orban, the world watches a desperate bid for relevance. But this isn't strength, it's survival mode. Russia's economy, once propped up by energy exports, is isolated, with Western sanctions biting deeper. Gold prices soaring to $4,500 an ounce. That's China stocking reserves, further eroding the dollar's dominance while Russia clings to discounted sales. Putin's vibrant nation narrative crumbles under scrutiny. Zelensky inherited a democracy under siege, while Putin inherited post-Soviet chaos and turned it into a kleptocracy. In this context, China's strategy shines. By partnering with a weakening Russia, Beijing gains short-term wins, secure energy flows, and a united front against U.S. tariffs, but it also highlights Putin's vulnerabilities. As Russia faces economic implosion, with whispers of Putin's health failing at age 73, China positions itself as the steady player. This isn't just trade, it's a geopolitical chess game where China is several moves ahead, using allies like Putin as pawns while his regime teeters on the edge. The ripple effects, global supply chains are fracturing. The U.S. port fees on Chinese goods, effective this week, could inflate costs further, hitting American consumers hardest. Europe, caught in the crossfire, faces its own trade woes with China, while the WTO predicts slower global trade growth in 2026. For the U.S., boycotts and tariffs might rally the base, but they risk isolating America, pushing allies toward Beijing's orbit. Canada's own trade frictions with both powers fracture any Team Canada unity, showing how this war spills over borders. In summary, China isn't just enduring the U.S. trade war, it's thriving in it, tightening the screws with resource controls, diversified partnerships, and unyielding confidence. As tariffs climb, Beijing's pivot to new allies exposes the weaknesses of figures like Putin, whose regime is collapsing under self-inflicted wounds, a failing war, economic isolation, and internal decay. This partnership may buy China time, but it underscores Putin's downfall, a thug whose myths of strength are shattering, leaving Russia on the brink. My prediction: if talks fail, we'll see a fragmented world order, with China ascending as the resilient giant while the U.S. pays the price in higher costs and lost influence. Putin's endgame, closer than he admits. History shows empires like his don't fade quietly. This isn't just economics. It's a shift in global power that could rewrite the map. Thanks for watching. What do you think? Will de-escalation prevail? Or is this the new normal? Drop your thoughts below, subscribe for more unfiltered analysis, and hit that bell. Remember, in a world of giants clashing, knowledge is your shield. Stay vigilant.